Leaders gathered here this week against the backdrop of the largest ground war in Europe since World War II. Sanctions imposed on Russia for its invasion of Ukraine prevented any Russians from actually attending. And China was represented by its vice premier, Liu He, not its president as in years past. But China, nevertheless, was very much a topic of conversation at the World Economic Forum, as Liu He actually left Davos to go over to Zurich to meet with Janet Yellen, the U.S. Treasury Secretary, raising the prospect of maybe better relations between the United States and China. We asked U.S. Trade Representative Katherine about her take on what was accomplished by that meeting.
With respect to trade, I think that the expectations for everyone, workers, families, businesses in America, in China, around the world, should be that President Biden is committed to bringing a thoughtful, deliberate, strategic, and ultimately effective approach to the challenges that we have, as well as the opportunities that we have in this profoundly consequential trade relationship.
WTO Director Ngozi Okonjo-Iweala is encouraged by possible thawing between the United States and China.
There's quite a bit of optimism that is being attached to the opening up of China. And I think the meeting of Yellen and Liu He is a good sign, but I think we should also keep it in check.
Mary Callahan Erdoes of JPMorgan says she's seeing some hopeful signs out of China already.
Having come back from Hong Kong just a few weeks ago, you can just see the pent-up demand of what's there. People wanting to go in country, people wanting to come out of country to travel around the world. I think the opening up of China, while it will have its ups and downs, it will hopefully be a net exporter of deflation, which would be good for the world, getting all of those kinks out of the system and really bringing back growth in a positive way. So I'm looking forward to that. I just say, for us at JPMorgan, getting to see our people who are on the ground in China and have been working so hard throughout these many years of us not being able to travel in, we're really excited about that. We're looking forward to lots of good reunions and the like, but people are really excited. And I think it means a lot of things. The tone that you're hearing from many that are either going in already and or are just listening to some of the conversations here today are really positive about what could be happening. And of course, there's all sorts of negotiations that have to happen to make sure that people do things in the right way, that people work forward to cooperation on a fair and even playing field. And I think that those are the important conversations that have to be had. But now that we can do them in person, it's going to be a hell of a lot more fruitful to be able to do it that way than to try and do these things on some kind of a flat screen where you're not able to have those personal connections that are so important when you're going through these negotiations.
But the WTO Director General's concerns about trade do not end at China, as she says that the WTO has calculated just how much the global economy would be hurt if we move from a global economy to one broke up into trading blocks.
The costs of the world fragmenting into two trading blocks, very high. We've actually done some simulations of this at the WTO, and we've seen that if we break into two trading blocks, the world global GDP is going to decrease by 5% in the longer term.
It's not just trade that has people's attention when it comes to globalization or the lack thereof. We talked with Nick Clegg. He's president of Meta Global Affairs. He's the former UK Deputy Prime Minister, about whether we were headed toward a world where China is separated from the rest of the world when it comes to the internet.
Oh, I think they already have bifurcated. We don't have a global internet. People keep talking about the global internet. It doesn't exist. You have a Chinese internet, which on its own terms is highly successful. It's walled off from the rest of the world. It's subject to a great deal of internal surveillance, but it doesn't welcome. For instance, Facebook is not allowed to operate in China, whilst, of course, Chinese social media companies are allowed to operate in the United States.
TikTok.
Yeah,
TikTok,
so
for example.
TikTok.
How big a risk is that, a national security risk? Because many in Washington think it really is.
Well, look, I'll leave that to the national security experts. What I would observe, though, to your earlier question, which is, there isn't a level playing field. Chinese social media companies are able to operate both in China and in Europe and America. We're able to operate in America and Europe, but not in China. So, at the moment, there's an imbalance there, which doesn't, I think, in the long run, make a whole lot of sense. And it's partly because the approach to data, the approach to privacy is just very, very different culturally and legally and politically in China than it is elsewhere. And then there are slightly more subtle, narrower differences between the EU and the US as well. And I think one of the interesting dynamics you have is that you have the European Union now leading on new rules, leading on new regulation, but not leading technologically or commercially. You don't have, all the big tech giants are either in the United States or China, and yet it's Europe that doesn't have the big tech giants that is inventing the rules for them. So it's a very interesting jigsaw where I would actually add a fourth element. I think India. I think you have Europe, America, China, and India. Those are the four great big sort of jigsaw pieces that make up how the internet operates in the modern world.